Here in South Korea, the local currency and local bourse have been quick to respond to the relentless violence in the Middle East. The won lost greater ground against the US dollar, as did the benchmark KOSPI, which plunged over 6%. Our correspondent Kim Do-yeon has the numbers.
The South Korean won closed at 1,517.3 against the US dollar on Monday, finishing above the 1,510 won mark for the first time in 17 years. The depreciation stems from extreme volatility gripping global financial markets following Iran's blockade of the Strait of Hormuz and a 48-hour ultimatum issued by US President Donald Trump. International oil prices have surged, leading to investors turning to safe haven assets. In fact, the dollar index climbed back toward the 100 mark. The benchmark KOSPI also took a hit, closing at 5,405.75, down 6.49% from the previous closing. The steep decline prompted authorities to activate a sell sidecar early in the session to temporarily halt program trading. Foreign investors led the exodus, offloading trillions of won in local shares. This resulted in significant losses for top market cap companies, including tech heavyweights Samsung Electronics and SK Hynix, as well as Hyundai Motor and LG Energy Solution. However, analysts note this does not reflect a fundamental weakness in the tech sector.
It is difficult to say there is any major damage to semiconductor industry fundamentals or exports. The sell-off is largely driven by a preference for safe assets and securing cash.
Analysts say whether the situation will be prolonged will be decided in the next few days. The nation is now in a complex trilemma. Policymakers are forced to navigate a rapidly depreciating exchange rate, a plunging stock market, and the renewed threat of high inflation from soaring oil prices, which heavily complicates future interest rate decisions.
There is a spreading sentiment that rising inflation will prevent the Fed from cutting rates and could instead lead to a rate hike.
Some analysts suggest the severe market reaction in South Korea is a combination of geopolitical fear and a natural market correction.
The crash is a combination of a necessary correction phase for an overheated market mixed with the ongoing Trump phobia.
To mitigate the economic fallout, the South Korean government and the ruling party are currently drafting a supplementary budget estimated at 25 trillion won. Kim Do-yeon, Arirang News.